begin choking out the centre's borrowing calendar for the first half of the fiscal 19 today. We have Poonam Sani who's joining us now to tell us what to look forward to. Poonam, most of the bond market players are actually watching out for as to what sort of inflow in terms of liquidity is the government expecting. Tell us, what are the expectations?
Well, we did see some amount of respite to the overall bond markets. In fact, post the mild hawkish Fed, we did see the US yield easing to nearly a 6-week low. India bond yields also have eased to nearly a 6-week low. It's down nearly around 25 bips in the last 3 weeks. While there is some of the expectations in the market stating that there is renewed optimism that FPI bond limits may be high. To know that FPIs have been net sellers of close to around $1.4 billion in Feb and March. Government is likely to front-load expenditure, of course, during the next quarter. We're also likely to see that RBI may open up unlimited repo window to ensure enough liquidity, and also that there is a likelihood more amount of short-dated paper. The concerns, of course, to remain in terms of the overall crude oil. Crude did hit $70 per barrel mark at a 7-week high. So those concerns to remain. Besides that, of course, the fact that the PSU banks are having very less appetite. They're already sitting on excess SLR. In fact, we should also be watching out for FIMDA. There is a possibility that FIMDA, in fact, may be proposing tweaking to the government bond valuation. In fact, that should be the key thing to be watched out for going ahead. And also the regular concerns on the CAD as well as the US interest rates. Meanwhile, all eyes would also be in terms of the H1 borrowing. It's likely at 3.75 to 4 lakh odd crore, a front loading of 60 to 65% of the gross borrowing happens in FY19. But besides that, of course, all eyes would also be on the RBI meeting probably during the weekend. It's RBI meeting, in fact, on H1 borrowing, and also to discuss other issues in terms of the bond markets.
Thanks a lot for that. Now, given the fiscal concerns, this meeting assumes significance and will be closely monitored by the money market on Monday.